All right. Good morning, everybody. How's everybody doing this morning? Miles, excellent. Hopefully, you guys can hear me. Good morning to you, Crazy Ivan. We are all coming down off of the boot camp high that just concluded. Got a day to rest my voice yesterday, so I was a little concerned that might affect us this morning, but I'm okay. All right, so the market's about to open up in a moment. Crude oil got long, missed its target by one tick, came down and stopped out for a break-even trade. And then the trade off of the 200 moving average here, one of the additional diamond level setups. I find those setups are usually better when they're closer to the line, but this trade is still living. Support hopefully will hold, and we'll see if we get another leg higher. But that if it does come up, crude oil is long from 36, 73.36. The stop is at 14, which it is testing right now. Target 73.52, 61, 70, and 79. So we'll see. If that comes back up, you might want to adjust just above the swing level here, 39. Let's see if it'll break that. I don't know if you want to get long right there. You probably want to get long just a tiny bit above. So you can go from 36 to 38, actually, not 39, 38, if it comes up. There is a long in the pound Aussie just triggered in. 8867, that's targeting 81, 88, 96, and 04. That stop is at 88.47. Markets have just opened. You got a long on the YM, heads up on that. That one is long from 946. Not sure how fast that happened. Yeah, pretty fast. And it looks like it may stop out, and it just did. So maybe with a little luck, you guys might have missed that, hopefully. But otherwise, we have to wait for another setup. Markets are up. I mean, they gapped higher this morning. And now it looks like they may be coming down, at least to start. A little bad luck there with the YM. We'll look for another trade. The way this moving average is pushing lower and lower and crossing over the 200, we're going to test in this area here. You can see very little range for the last hour, a couple hours even. You can see the overnight rally. And then it's been coming off. And there's another long, so heads up there. Long at 46. Definitely got the jitters. I'm going to try to grab that. Maybe it went too fast again. Stops at 04. Targets at 980. And it did go too fast, at least for me. Maybe if you guys were paying attention, you might have been able to grab it. 40. Yeah, you had about 12 seconds before that bar closed. I'm not sure how long it hovered around the entry. If anyone was able to get that YM trade, let me know. Definitely a nice trade. Almost got to target too. It just stopped out. Markets are definitely on a caffeine high right now, it seems like. Moving pretty quickly at the open. Pamela says, very informative boot camp. Very good. Hey, I was able to get the video replays up on the member site over the weekend. We're working hard at getting those produced and posted for you guys. They're pretty much done. And anyone who just has the E-mini catapult and not the energy catapult, I decided to share the boot camp replays for you on the E-mini site as well, because I think there's really helpful information regarding just everything in general, trading, catapult. And so I just put the replay videos on the E-mini catapult site as well for anyone interested. Okay, you got a lot of jitters going on here. Another long trade on the YM. There was a short, then it canceled. And these are difficult trades to execute on because they're moving really fast. If you pay attention, you can anticipate the setup by figuring out the low and then 14 points higher and then 2 points above that for the entry. But you got to do fast math in your head. And while the markets are on some serious caffeine, it seems, moving as fast as they are at the open here, there's a chance to get in on that trade again. Long at 88, targeting 15, 30. So it got filled. And money management is at 012. And it just hit it. And it just hit target 1. Nope, it missed by 1 tick. Oh, what a bummer. All right, that trade's over. It was trying to get to 15, and it got to 14. And another short. Watch out. This is it's almost fast market conditions the way these markets are moving at the moment, at least with this momentum bar. Let's see. Breaking to a new high. Failure to get higher could set up a strong move down. Question is, are we at POQ already? And I think we are. So that is a short. If anyone's interested, at 69, targeting 32, 912, 891, and the stop is at 16. If anyone's in that short, money management is at 36. So I figured I'd call this trade as well just because the others went so fast. Now, if it can get through the 200 moving average, that's the key here. You can see that's been throwing up some support since the session started, basically. Keep an eye on that. Let me know if you're in that trade. The short on crude did happen, or at least there was a short on crude, and that's a stop and reverse, and it's a tricky one because you have to adjust it down, and the moving average is at 17. Anyway, if you adjust it down, you got filled regardless. It definitely went through it, and crude oil is short. So crude oil, not the most friendly chart to start this morning. with this garbage price action, which hopefully is going to resolve now. We'll see. The failure to get higher could lead to a strong move down. Same with the YM. The YM is testing its 200 moving average again. It's really having a hard time getting through it down here at 950. 950, pretty big psychological support area. John Ford, glad you enjoyed the boot camp. And we'll look at some catapult trades, but let's get through this little open section here. Take a closer look at what's going on with the YM. So you could see that it's kind of in this consolidation, finding support. That's a trade off of the 200 moving average. You have to respect that. 83 being the reversal on that.
Order rejected. Order filled.
And getting long, you can see two different setups on the 200 moving average. So it's hard trading this market when it moves like this. So unfortunately, it could not get through the 200 moving average, and now it looks like it's going to come up and test these highs again. That 200 moving average setting up a couple longs there. And they're triggering in so fast that you really have to be on your toes and well practiced with your executions. So the first trade triggered in at 81, so targeting 006 and 020, stops at 48. SK asking a good question. The difference between a momentum bar and a tick bar. Yeah, big difference. A momentum bar is like a range bar. Each bar is the same amount, the same size. So in the case of this Dowie mini chart, it's 14 points. So from top to bottom, from high to low, every bar is 14 points. And it's based on pure price action. Once the 14-point range is completed in a bar, the next bar will not open until the price goes one tick beyond the range. So the bar is 14 points. It has to go one more point, or depending on the chart, one more tick beyond. So that's why you always see, like in this case, you see charts that are, they don't all line up at the same highs. Like the high of this bar is one tick lower than the high of that bar. Once it exceeds the range, then the new bar opens. So that's a range bar. That's a momentum range bar. By the way, nice winner here. The 200 providing all kinds of support, and then the setup, and then now hitting targets 1 and 2. Even the second trade came up and hit money management, which I'm curious why that second trade printed, because the first trade filled. I must have add-on trades turned on. Let me just double check. That's a little confusing. Yeah, add-ons. We don't need to see those. So sorry about that. Oops. Whenever I do the trade room, I end up mousing left-handed. And while I'm not bad at it, sometimes I bump the mouse and then it moves the mouse away from, why is this? Yeah, I can't even, for whatever reason. Then a dialogue pops up on another monitor and I got to figure out why and all that. All right, there it is. Sorry about that, guys. And SK, Ninja Trader and Thinkorswim use range bars that are the same as the momentum bar that I just explained. So the tick chart is different. The tick chart counts how many trades actually take place. So a 377 tick chart isn't based on price range. It's based on order flow. Like a 377 tick, every time there's 377 trades, and it doesn't matter the size of the trade, 377 trades, the bar closes and the new bar opens. And so when we do tick charts, like on this crude oil chart here, we have a tick counter, and that one counts down the ticks and the percentage. So it's counting down the ticks, but the percentage is going up. So now it's 60% completed, 62% completed, et cetera, et cetera. So you can anticipate when the bar will close and the next bar will open. But you'll notice with tick charts that the bars are different lengths and different sizes because, again, it doesn't matter about range. It's counting order flow. Tick charts are very good. I just think momentum range bars are better for me. Tick charts you can do very well. I mean, I use a tick chart for the crude oil inventory report each week. Crypticon waited a month for the boot camp, now starting vacation. You know what? Go on vacation. That sounds wonderful. The markets will be here. The boot camp will be here. The training will be here. The charts, everything will be here. Go enjoy your vacay. You deserve it. How do you determine which bars to use? Well, it goes back to the three. Well, okay, JDS. There's a few things. One is the 3-step sniff test. So that's something I always teach in all my training, and you'll find a good video on it here on this YouTube channel as well. But that's the easiest and the best approach. Basically, it's 3 questions. I call it a sniff test. It's really an eyeball test. But the idea is that if it, smells like a bowl of pasta, then it's probably not, a bowl of stir fry. Terrible analogy, but you get the point. If it walks like a duck, talks like a duck, smells like a duck, it's probably a duck. So the 3-step sniff test begins with, a simple trade plan. You determine a start time, a stop time, and some sort of goals for the session. We usually rely on our power of quitting concepts. Again, all stuff that's taught in the training in just about every strategy I've ever done. So the first question is, are there enough trades? So if you're starting at 9 a.m., for example, you want to trade for the next 60 to 90 minutes or less, depending on the market. You look in maybe 10 or 20 sessions and determine if there's enough trades. So in other words, you could look at a variety of momentum bars, tick charts, and answer that question, right? Because sometimes you'll pull up a market and you'll try something and you'll be like, wow, there aren't any trades. Or there's one trade, maybe 3 out of 5 sessions, and that's it. Now that might be enough. Depends on your goals and what you're trying to accomplish. If you already have a good plan and you're looking for a supplemental second plan or third plan, maybe that is what you're looking for. So you have to ask the question in relationship to what you are looking for. So are there enough trades? Right? The second question then is, are the trades an appropriate size? Are they too small? If they're too small, you don't make enough. The risk-reward ratios aren't good enough. You get whipsawed in and out, real noisy market. That's not good. So you can go ahead and look at 10 or 20 sessions, look at a bunch of trades and get the average size and determine if they're either too small or too large. Too large would be too much risk. But you look at the average, and those 2 questions are very easy to answer. You just look at several sessions and you get a sense of what's happening. You can even go back a contract or 2 and look back and see, usually they stay pretty much the same. But those are 2 ways to then determine a chart that rises to the next level, which is step 3. Is it worthy of your time to fast test it? Now, what's a fast test? A fast test is when you take those parameters we just discussed, start time, stop time, quitting goals. Quitting goals might be hitting your target 2 winner, positive result, done for the day. Maybe it takes place and happens in the first trade, second trade, maybe up to 4 trades or whatever. So the third test is the most important. Can you quit with a positive result a vast majority of the time with minimal and efficient trading so you can control your drawdowns? And that's where the rubber meets the road. And you can go ahead and look at a dozen different trade plan ideas because it doesn't take long. This is all part of the pre-production work. We call it the ditch digging of trading because you lay your rebar, you pour your cement, you build a strong foundation for yourself. If you look at a bunch of different trade plan ideas, 2 or 3 of them in the end are going to rise to the top and pretty much scream at you that, hey, I'm the best. In other words, the cream rises to the top and you'll determine the best choices for yourself. And then the next step, of course, is dedicating yourself to really fleshing out your trade plan and backtesting with the UTA spreadsheet. That's the process. If you do that, along the way, you build a strong foundation of belief for yourself. You understand the cadence and rhythm of the trade plan. You understand the random distribution of wins and losses. You start to understand the win-loss column, the good, the bad, the ugly, and then the great. And you go through all that and you witness the equity curve going up and up and up. That's why the UTA spreadsheet's so great. And you realize, hey, this trade plan is going to make me money. And now you can believe in it and start practicing it until you're good at it. And then you could trade it live. That's the process. That's the process to get successful. So the question you asked is a great question because it's the preliminary step to building something successful for yourself. Kenneth, when you say the CPX isn't printing your charts, what platform are you using? Because I know that TOS and MT4, there were new software got loaded that became active on August 1st. So you probably have to go on the member site and download and reinstall it because we have to do updates from time to time. And so I believe that just occurred on those platforms. Yeah, on TOS for sure. So just go on the member site, follow the install instructions again. They're super easy. And once you do that, it'll work. Craig says, do you usually trade at the opening of the market or wait for 10 to 15 minutes for things to level out? It's trade plan specific, Craig. I mean, both are valid. Trading at the open requires a certain skill and patience, and you have to understand trades can move too fast sometimes. On the other hand, imagine if you're finished in the first 7 or 8 minutes, but you're waiting 10 or 15 to get started, and you already would have been done. So it's a great question. I think it depends on the market, but really in the end, it's trade plan specific. It's the you have to determine those rules for yourself. Like, what can you do that's realistic, and how does a trade plan perform? And I mean, it's a big question because the answer is so varied. It really just depends on so many things. But I'm glad you're thinking about it. That's something you can fast test, isn't it? That's an easy fast test. You can look at a market for the last 100 sessions. I mean, dedicate a few hours to it. Fast testing. This is all part of being the CEO of your trading business and not some guy trying to trade. This is super important. It's really easy to look at a specific market that you're wondering, look at a 9 a.m. or 9:30 start time, depending on what market. Then you could look at 9:40, 9:45, and keep a very fast chicken scratch counting set of columns. Win, loss, break even for the session. Do you hit your goals or not? 1, 2, 3, 4, cross, right? You were in the boot camp, weren't you? Yeah, you were. So you know what I'm talking about. Fast test it. That's how you discover the answer is really fast, which is the whole point. I'll be right back. All right, I'm back, guys. Sorry about that. All right, so let's just review a few things. You could tell that the pound Aussie moving very slow, but that's the long trade. Looking at soybean trade on counterpunch. Looks like I got some stuff turned off. Let me double check something here. Yeah. Yeah, so soybeans actually moving rather quick here. So I don't know if anyone would have been able to grab this. That would have been very difficult. 5 seconds. I doubt it unless you're anticipating tops and bottoms. But even so, that's really hard. So soybeans kind of up and down here. And I think you would have had to have been present to know how it all worked out. This trade probably too fast to grab as well. When you see it spike up and down, that's usually like you have very little time to get in the trade, and that would have been good. This one worked out. This one is actually doing quite well. Well, got to target one and then stopped out. Yeah, so soybeans, that's a pretty messy chart. Might have been very difficult to succeed at this. It looks like all the trades are really fast today so far. But if you're trading soybeans, let me know. I'm curious. I know we got people in here that or used to be in here that traded all the time. Our friend Bill Miller, who I haven't seen in ages. Looking at unleaded gas, which we didn't look at yet, one and done. Although that was also very fast. I mean, again, the market's just really quick. I don't know if that's tradable either, unless you're anticipating lows. And again, you could look at the low at 71, and knowing that the low is 71, it's a 20-tick momentum bar. So those of you curious about momentum bars, JDS, anyone else interested in why this is an interesting bar, while that bar is forming, you can anticipate where the high is going to be because you know the range will always be 20 ticks, right? So this is how you learn to anticipate a trade setup. You have to really know the strategy well. But you could see the exhaustion dots and you could see their proximity to the 50 moving average, which is the criteria to the yellow trade. So if the low of the bar is 71 and you know the high of the bar is going to be at 91 and the entry is 2 ticks above that, while that bar is forming, you know the entry is at 93, you can place your order and you could look to your left and quickly see a swing high, maybe to adjust around up to 97. I know that usually 1 or 2, maybe 3, rarely 4 ticks is what you normally want to adjust. But with unleaded and heating oil, I think you can adjust up to 10 ticks because it's such a small tick at $4.20. And there's a little bit of a bid-ask spread to be concerned about too. So you learn this, right? But that trade triggered in and the bar closed up here 3 seconds, 2 seconds. So I mean, if you had a stop limit order, it's possible you don't even get filled. And if you have a market order, you're probably paying a lot of slippage. And that's if you're able to anticipate the setup. And I doubt it, because if you look at the prior bar, 59 seconds, 2 seconds later, this bar is finished. 2 seconds later, this bar is finished. So that's just untradeable. But I'm just merely using it as an example on how you can anticipate setup. So if it's untradeable, don't overthink it. It's just untradeable. So wait to the next setup. And the next setup comes here. And that one gives you a lot more time. 9:15 and 18 seconds, 9:16 and 50 seconds. And you could anticipate again the setup. If the low is at 51, you know the high will end up being 71 and the entry will be a 73, which it was. Or it actually went up to 76 because I think I have a 3-tick entry. I don't even remember. I have to look. 4-tick entry. So it's a 4-tick entry. So you know if it's 71, 4 ticks above that is 75. Get off the key level, move it to 76. You could place that trade, and then it comes up and it does hit its first objective, target 1, 53 ticks, and then stops out. And now it's in a second trade, and that one also hit its first objective for 51 ticks, and that stopped out. So 2 winners in a row, even though the first trade was missed and untradeable. You just go with it. Pamela's saying that was fast. Yeah, it's the open. It's when the session pretty much starts, and it's manic, and that could happen. Sometimes, the markets don't care what you're trying to do. But the thing is, don't panic. Stay with your plan and just realize there's another bus along, coming along. You missed the first one, grab the next one. Use power of quitting to quit with a positive result most of the time. Still applies. So unleaded gas doing well. The 377 tick chart with counterpunch with crude oil. Well, we know that the morning started kind of with garbage price action, and you could see it. Anytime you get this sort of price action here, what are you going to do with that? It's like the pregnant snake. You got breaking out up, breaking out down, back to the middle. This is just awful. There's nothing you could do with this. It just happens. So let's just see. There's an 8:50 start time and a 9 a.m. start time. I don't think this did well in either case. But at 8:50, you have a short, and it comes down and hits money management and then stops out at break even, right? The short's a couple bars earlier. Then you have a long trade, and that one stays long. It's not going to reverse to short here because of the stop and reverse adjustment. You would push it down 2 more ticks and then work around key levels. So 73.14, it doesn't get there, comes up again. And ultimately, you have another, that trade would have canceled because of the new long that would have triggered in. So you're still long, but then it's going to get short. Nope, didn't get short until here. Nope, it didn't even get short here. You have a new short. Got short there. Not at 09, but at 07, because again, you have the 2 tick adjustment. So now it's short at 07, and then it comes down and hits money management again. So even though it's kind of crappy in all this, it's not terrible because the long trade gives you a partial loss and then a break-even trade, and the session's still going. So it kind of mitigated and handled all this garbage price action without getting whipsawed up and down, up and down, up and down, if you just know the trade plan rules. So even though it looks terrible, our rules are what help us mitigate a lot of that. Doesn't mean it won't end up being a losing session, but it did get long again. So after it stops out with money management, now there's another setup here. And if it comes up and hits a target 2 winner, it probably would be power of quitting, but it's got a lot of resistance to get through, which is hard to trade into. The 50 moving average, which crosses below the 200 right there. I say that the odds are that this trade probably won't succeed, but it could. But I don't think the odds are as good unless it could break through. So very well could, but long at 73.12, targeting 37 is a good 25 tick trade if it can get up there. But there's also the risk of another stop and reverse, which you've already see the setup down here, which hasn't canceled yet. And so, yeah. And the other idea is you could have adjusted around one of these lines to try to avoid getting long until it pierces through these lines. So that's why, the 377 tick is hard when the market's crappy. You have to really know your rules, and now it's short. So if you got long, you're short now. If you didn't get long, good for you, then you're short still. And it's just garbage. It's a lousy I'm not a big fan of the 377 tick chart except for the crude oil report, actually. And unfortunately, it looks like the pound Aussie is heading lower. That stop is at 47, and it's very close to getting hit, but it hasn't gotten hit yet. The green trades can do this where you get into it, it comes down, tests the lows hold, and then eventually it works its way higher. Like if you want a nail biter setup, the kind of setup that gives you acid reflux and edge of your seat white knuckle trading, the green trade often does that. And it still could lose, but a lot of times we see it where the stock barely holds, but it holds, and then it works its way up again. You'll see that more and more with the green trade than any other setup, I think, on Spotlight. Would it make any difference to go to a higher time frame? I mean, it could, JDS, but one of the things that is principal to what we do and why we can, achieve trade plans that continue to work over time is that it's all trade plan stuff. So going to a higher time frame is tricky because what are you measuring that from? Do you have back test results? You don't want to just shoot from the hip, and you don't want to. Here's the thing. This was a big theme that we covered in the boot camp. There's a difference between, the key ingredient to succeeding, in my opinion, like the number one place to start before anything else, is figuring out why you're trading in the first place. And you might scratch your head and go, oh, that sounds like, shoveling smoke. Who cares about that? Well, it's super important because if you don't know why you're trading, you're going to ask for things that you don't intend, and the market's going to give it to you, and you're not going to like it. What do I mean by that? Well, there are those traders that are trading to not lose money on a trade. And then there are those traders who are trading to make money with their trading business. Think about that for a second, because they're two different motivations. And you have to be very careful about what you're asking for. And I always could recognize this based on the types of questions I receive, because it's easy to understand the psychology behind the questions. Right, John Ford? We had this discussion the other day. If you're trading to not lose, that's probably what's going to end up happening. You're going to end up losing. It's just how it works. If you're trading to make money, then you realize that there's a random distribution of wins and losses. Some trades are going to lose. As long as you can quit your session positive with a winning result a vast majority of the time and control your drawdown with minimal and efficient trading, then you take the bumps and bruises, but you grow the equity in your account because you have a proven trade plan, a trade plan you've been able to prove and believe in. You have measurable results from the proof, from the work you've put in to prove it to yourself. These are all concepts that are higher level, that are required to succeed as a trader, in my opinion. And I think my opinion counts. I'm doing a trade room I lost count. It's getting close to 2 decades. That's a lot of hours. Not to mention all the trading I've done and all the traders I've worked with and all the strategies I've created and winning trade plans too. If you want to make money as a trader, then trade to make money. If you want to avoid losses, that's a different motivation. So you got to really have that conversation with the guy in the mirror and really figure it out. I always say trade to make money. It's the only legitimate reason to trade. If you're trading to not lose on a trade, good luck with that. You'll be forever frustrated because there's a random distribution of wins and losses. So taking your idea again, which may not be a bad idea, don't get me wrong, it just opens up this line of discussion, which I think is super important. Can you prove that your idea will make money over time with a large enough sample set? It's very difficult to test one chart on one time frame and then toggle over to another chart on another time frame Establish a set of rules that you can follow and quantify so that you can reproduce it and duplicate it and do it in the same way each and every time, and get measurable results so that you can prove that that method will make you money over time, right? It's very hard to do that. You can do it. It's a real dedication. It's going to take a long time, and you got to figure out a process on how to test for that. I'm not saying it's not doable. It is. It's just harder, a lot harder. But if you can't prove it first, how are you going to believe in it, and how are you going to know that your idea is even any good when the motivation is just to avoid a losing trade, when your idea might work and you'll still have trades that will lose? That's the thing. It doesn't matter what you choose. Nothing wins 100% of the time. So if your motivation is to avoid losing trades, I think you're on a slippery slope to ultimately a self-fulfilling prophecy that is not what you wanted, if that makes any sense. Now, switch your mindset to trading to make money, which is what I think is the only reason to trade. You can prove to yourself a set of rules will make you money. You can prove it. And inside of that making money, there's some good, some bad, some ugly, and then some great. The great usually follows the ugly. It's the classic story I told my first year doing a trade room over 15 plus years ago. Again, I forgot even when it was. It was so long ago, where we experienced a 16 trade losing streak. 2/3 of the people quit by then. Then on trade number 17, a 20 trade winning streak and new equity highs. I mean, it was like the 100-year storm and then the 100-year gift of abundance back to back. And it's never happened since, but Van Tharp writes about this. Anyway, that wasn't even my strategy, but it did happen. I did experience it, and I learned so much from it. So I tell that story over and over again. So if the trade is not going to come with more profitability, then why force it? Yeah, no, I agree. That's why we have a stop loss. So the idea is you have a trade plan where you can prove and test your plan and then prove that it makes money. So we have tools for that, and we have a method for doing that. We always trade with bracket orders. So like I showed during the boot camp on Catapult the other day, this trade plan that I've been working with, and I showed how we use these tools to prove and test that the trade plan will make money, right? And the tool we use is the UTA spreadsheet. So I don't want to explain the whole sheet now and how it works. I got tons of videos on it on my YouTube channel, but the idea is you log a bunch of trades per the rules of your trade plan. In this case, one trade is really 4 because I'm testing 3 targets in a trailer to get different results. So that's really one trade, right? And you develop this win-loss column, and you start witnessing the random distribution of wins and losses, right? Some trades lose, some trades win. Like any strategy, there's always going to happen. And even if you don't have a strategy, you're going to win some and lose some, right? Regardless. That's just how trade. You're not going to win 100% of the time. And that's why the motivation of trying not to lose a trade is a losing proposition. You're better off trading to make money. So what does making money mean? Making money means this. That's making money. Starting here in the left corner and ending up here on the right side. That's making money. And inside of that are wins and losses and wins and losses and wins and losses and wins and losses. But you're quitting positive most of the time. How do I know that? Well, the UTA spreadsheet shows us that. We're quitting positive 76.5% of the time. We're quitting our weekly sessions positive 81% of the time. That's money. That's where the money is. Now, this is just trading with a single contract. You know what happens when you put on a 2% risk and apply it to the average losing trade? You end up with, instead of turning 50 grand into 63 grand or whatever you start after expenses and all that, and after that's a few months, right? Instead, you put on money management, the power of compounding, and that same trade plan with the same trades grows to $127,000. Am I making my case? Now, that's not trading to avoid losing trades. That's trading to make money with a trade plan that grows equity despite the random distribution of wins and losses. So those who are trading to not lose on a trade, I'm learning from the motivation is deeper. It's usually someone who's afraid to trade, who's over trading their account, hasn't done their foundational work, hasn't built their foundation properly, doesn't believe in what they're doing, doesn't have a trade plan. All the problems that cause traders to lose. You see? Ari, you seem to always blame the trader when we get stopped out. Why is that? No, I'm not. What do you mean blame the trader? Not blaming the trader. Trades lose. It's not the trader's fault. I'm sorry, Ari. I have no idea what your comment is in regards to. Maybe I lost the context of it. If you want to rephrase, please do so. JDS. So if the trade is not going to come with more profitability, all right, well, we talked about that. Mark, this 1.5 range bar in TradeStation, what range is it in Ninja? 15 range? Yes. JDS, you tell I'm an old Forex trader. Yeah, no, I couldn't tell that, but fair enough. Well, for Forex, my recommendation regarding my stuff is Counterpunch Trader. I mean, I think that Spotlight's good for day trading, but Counterpunch Trader is good for day trading and swing trading. I mean, Spotlight is not bad for swing trading. It's just that it depends on what bars you use. I prefer end of day bars because it's easier to manage. It takes less time. And so for me, Counterpunch is the way to go because Spotlight's a little pickier and you don't get as many trades. It's harder to get a good sample set with your testing. But with Counterpunch works really well. And that's what I would probably recommend. And also it works on MT4 and Spotlight doesn't. So Counterpunch Trader, I think, is the way to go. I don't have the swing trade workspace open at the moment, but I could open it if you want to take a look at some of those setups. The diamond level, let's see, diamond can be compared to the Spotlight Masters. Yeah, good question. So probably the best way to explain it, I could either use unleaded gas or YM. Let's look at the YM because there's some of both setups that occurred. So the SMS Gold, Spotlight Master Suite Gold, is just the rebranding of what was the Spotlight Power Trader when it first came out several years ago. And if I open up the calculator's got a bunch of inputs. These are the inputs that print the trades on the chart, okay? And if you come down to the section here, Trade Setup Controls, you're going to see from D02 down to D10, you've got 9 different setups, each setup with a different set of criteria that causes the setup, right? Where it takes certain rules of Spotlight, gives you a setup. The Spotlight Master Suite Gold comes with these 3 setups. 02, 03, and 04. That's the basic Spotlight Power Trader. So I'm going to turn off, well, let me just continue. The Master Suite comes with 6 additional setups, and each one does different things. Just this last one here is very interesting and unique. You can turn the rest off, turn that one on, and you get entirely different trades. It has to do with moving average crosses, crossing over, but you still need your Spotlight stuff to also corroborate exhaustion and balance line and price action. So I don't know what you know about the strategy, but the 6 different setups just expand what you can do. Ultimately, there was another strategy that I created. I never named it. I used to refer to it as fun with moving averages because I never named it. And I integrated that strategy into this calculator because it works so well with the spotlight concepts. So the diamond level has those additional setups, including the fun with moving averages, quote unquote, setups. So that's what the diamond level has. It also has additional filters. So there's other filters. Filters are interesting. You can turn them on and off and test for them and stuff. And then all the setups are color coded. Like, for example, here's 2 additional setups that the diamond level has. The original Spotlight Power Trader has a setup. It's the first setup that I actually used to create the strategy that says if our exhaustion dots, which are these 3 dots below the bar here that you can barely see because, well, let me make it bigger. These 3 dots, right? The olive colored dots that you see right there. When the exhaustion dots are within a certain proximity to the yellow line, which is the 50 EMA, what I learned from all my years with Counterpunch Trader is that when that happens, you often get a high quality setup because it's a good trending setup and it often gives you a subsequent action move. So if you know anything about what I teach, I always teach about action, reaction, subsequent action, and the subsequent action tends to mirror the first action. So what's an action? Well, here's an action. And a reaction is 1/3 to 2/3 pullback of the first action. We often use the 20 SMA to mark where that could end, but the 50 moving average works on a higher time frame also. So when the proximity of those 3 dots get close enough, one of those dots gets close enough to our 50 moving average, that's what gives us the yellow trade. And then the yellow trade, of course, has to close above our balance of power line. So you have exhaustion, seller exhaustion, price action confirmation, and then that gives you the yellow trade, which wasn't quite mirroring the first action, but it definitely got a percentage of the way up. Right? Missed target 1 by 1 tick. So it's pretty close to mirroring, but not exact. Nothing's exact in trading, but you can see the concept, right? So the diamond level, though, takes this idea and lets you apply it to a second EMA and the 20 SMA or another SMA. And it expands on this idea. So then you get, for example, the exhaustion on the 200 moving average, which gave us this trade. All right, so that's diamond level stuff. Now you could learn how to do it without diamond level. If you have the gold level and you understand the rules, and by the way, that's based on these dots. If you understand the rules of the strategy, you can set up your tool. Like I use a fib line retracement tool and I reconfigure it to be a spotlight projection tool, and you can learn to draw the trade. I've taught this so many times in here, but basically you can draw the trade like that. So you don't even need diamond level for this setup if you know what the rules are. And you can see it put the targets right where the dots are, right? So there's a lot you can do. That's 2 of the diamond level setups. There's others, of course. I showed you there were 6. Here's one off the 20 SMA. Same concept in dark blue, right? So there's 2 diamond level setups there on this chart. Okay? So basically, the diamond level just expands the Spotlight Power Trader concept and then combines it with some unique ideas on how to utilize key moving averages in certain ways. So you're really stacking the odds in your favor when you place a trade. So feel free to follow up if you have any questions. Of course, there's also the diamond level comes with the Trade Assist automation. And the Trade Assist automation then lets you test all that stuff. You could optimize and test, and you could determine what setups work best together on a specific chart. You could test start times, stop times, power of quitting, different charts, entry and stop levels, trailing stops, target levels, filters. So the optimization and the automation takes this tool then and lets you get big answers to big questions, I should say, there'd be no way to get it otherwise. So that's a bonus I include for anyone that upgrades to the diamond level spotlight, is the trade assist automation. It's like a $2,000 bonus. Right now I include that at no extra charge. So JDS, feel free to follow up. John Ford, where can we find the rules for concepts you speak of, like stop and reverse or key level adjustments, to be found on the member site? Well, it was in the boot camp. And I do believe I have to look at the cheat sheet. That's one of the things on my list. So I have a cheat sheet from the E-mini boot camp last year, and I'm going to upgrade it and update it. And so on there, I plan on putting basic concepts. Okay. So yeah, and I think that's really important. I agree, if I'm reading between the lines, which isn't that hard with this question, John, is a need to have an at-a-glance cheat sheet where you can just look and remind yourself until you learn. Because I understand a lot of these concepts, it's all about repetition. You have to see it. And if you have a cheat sheet in front of you, it's going to be very helpful. So that's definitely high on my list to get that done. Right now, my motivation has been getting the videos done and uploaded, which I've done. Although now I'm kind of editing them and uploading second versions, trying to cut out some dead space and try to make it a little more time economical. And then trade plans, and I started putting trade plans. I got the basic crude oil plan already, but there's more. And then, of course, the cheat sheet. And the cheat sheet I know is super important. So which one's more important than which? They're all important, and I'm going to keep working at it until you get it all. And that's like top of my list of to-dos, which is always very long. But with the stuff on the top, I get it done, and this stuff's on the top. So I know how important it is. But the fact that you're here is really good. There's a basic concept of stop and reversals, and I use it for every single strategy. For the most part, with a scalp and run approach like Catapult, this approach doesn't always apply. But the idea is, let me see if I could, what's great about a choppy market is learning this concept. I went through it super fast. And for those of you who don't understand or know what I'm talking about, it was probably too fast. But with this crude oil 377 tick chart at the start, there's long trades, there's short trades, there's trades that look like they stop and reverse. It's total garbage, but I went through and explained how it basically stayed long the whole time until I told you otherwise, which was way over here. But like this short trade, that didn't get short, even though it looks like it did, right? The price came down and hit the entry. So let me explain to you the method for mitigating choppy stop and reverse market, crappy price action, which no one likes. No one likes, right, JDS? No one likes this, but let's face it. When you're here at the right edge of the chart, you tell me how you know there's going to be choppy price action coming after, right? We have the benefit of hindsight. But when you're trading, you just have a long entry. And you don't know if it's going to win or lose, but it's the first trade of the trade plan, for example. And if you listen to what my whole idea of action, reaction, subsequent action, which is a great way to trade, it doesn't mean it's going to happen 100% of the time. It won't. It just happens enough times so that you can make money. But, here's an action move, right? Doesn't that look like an action move to you? Looks like one to me. Here's a reaction move into our 50 moving average. 1/3 to 2/3 the action move. So it's been trending up, even though it's kind of messy, but it made a higher low, another higher low, higher highs. Here's another subsequent action move that could tend to mirror the first action move. And then you get a long setup. So, I mean, are you going to go, oh, gee, well, how do I know if that trade's going to win or lose? How do I know if the next hour or half hour is going to be choppy, crappy price action? You don't know. And that brings me to the point, JDS. The bigger point is that that's why you don't trade not to lose. You trade to make money. And that's why you need a trade plan with rules so that you can quantify over a large sample set that if you just follow the plan, you will grow your equity up and down, but more up, hitting new highs when you hit new highs, controlling your drawdown with minimal and efficient trading, quitting, not trying to do too much, and then let the trade plan work over time. Because when you have the benefit of hindsight, you could say, oh, I wouldn't have taken that trade. Look how crappy the market is. You don't know how crappy the market's going to be. So what happens when you get long here, and now you have a short setup, possible stop and reverse? You can't ignore it because the market could go lower and hit its targets. And if it does, you got in here, you got short there, you lost hardly anything, hit a full winner, and in 2 trades, you hit your goals. So you can't ignore the short, but you obviously want to stay long. If you can, you'd prefer to make your targets long and not go short, but the market doesn't care what you want. So here's the concept. Principle number 1 is we're going to try to protect the trade we're in and stay long by taking this entry to go short and adjusting it down 2 ticks. So instead of 73.18, we're going to go down to 73.16. And let's see if the price action has enough downward motion or energy to push lower. Oftentimes it won't, and it'll go up and you stay long and you're a happy camper, a happy trader. Maybe you're trading while you're camping. That's the backpack trader. All right, so here's the thing though. We also have key level adjustments. So we adjust our entry if it gets to within 1 tick in front of a multiple of 5, a nickel. Well, 16 is 1 tick in front of 15. So then we're going to adjust the entry 1 tick lower to 14. So really it becomes a 4 tick adjustment in this case. 2 ticks because of our stop and reversal adjustment, and then we adjust around the key level of the 15. So from 16 down to 14. Okay, so the next bar does trigger in, unadjusted, but it only got down to 17. It didn't even get to 16 or 14. So at this point, you're still long. Then it comes up, and then it would have hit another long trade, and that's essentially cancels this short setup. So now you stay long, you cancel your stop and reverse to go short, and you're still long. So this entire short trade was mitigated. It comes up a little bit, can't seem to get above. It's like you're like thinking, okay, so this is garbage price action. Well, now you know because you're living it, but you had no way of knowing when you took the trade. Because as traders, we don't know. And that's why you cannot trade to avoid losing trades. Because you'll just make a bunch of decisions that make no sense because what you're implying is that you know more than the market, and you don't. None of us know shit at the right edge of the chart. I used to say we don't know jack, but I'm tired of this political correctness garbage. So I'm just going to talk to you like an adult. We don't know shit. Let the YouTube censors deal with that. All right, so the point is, you're still long, but anything could happen. You have a trade here, notice it's in gray. That's because there's a filter that grays that out. You don't take it, there's a filter, doesn't let you take that trade, and you know what the filter is? It's the high trend chop filter. When the market is choppy, which the indicator identified on this bar, you already had some chop, and then it finally said, hey, the market's choppy. Then it gives you the dots along the bottom line here. And so if the 50 moving average is above the 200 and your short is above the 50, it's going to filter that trade out. Okay, we call this the mustard line, the 50 moving average is the mustard line because it doesn't cut the mustard. If the mustard line comes between the entry and the target one, then, and you have the exhaustion dots, not the exhaustion dots, the chop dots down at the bottom of the histogram, it's going to filter out the short trade because it's identifying that the odds are better, it's going to go up. Doesn't mean it's going to happen. It's just the odds are better. And if you look at a lot of trades, which I have done on many markets, this is true. The chop filter filters out more losers than winners. That's all you could expect from a filter. So you still stay long. But you can see that it tries to get lower, finds support, starts moving higher, and you literally have a chance for this purple trade to still win. Right? You're in the right trade. That's the right trade. It's just a trade. But lo and behold, it just can't get above, and it looks like a little head and shoulders type of pattern in here, but failing to make new highs, making lower highs now. Then you have another short setup. So what are you going to do with that? Well, the same technique. Protect the long trade and adjust your short entry down from 14 to 12. So 12 is not in the key level adjustment situation. If it was 11, you'd adjust it to 09, around the 10. But it's at 73.12. Remember, if it gets to within one tick of a multiple of 5, a nickel, well, 12 is 2 ticks in front of the 10, right? So you don't do the key level adjustment. You just adjust your entry to 12. But it never hits it, and instead you get 2 closes above the signal line, and that cancels this setup, and you're still long on the purple trade, and you still have hopes that that purple trade can still work. You following? Now pretend this is any market. It doesn't matter the symbol. This is the method that I use for so many years, and that I've taught to so many people. Now you have another long trade. Well, we don't care about that because we're in this long trade. It does trigger in. That's neither here nor there. But then the market capitulates lower and we get another short. This time at 09, we make our 2-tick adjustment to 07, right? So we just keep following the rules. But we have to know how to put on a stop and reversal in our platform and cancel it. Put it on, cancel it, while keeping your long trade live with its handles. Put it on, cancel it. So that's something that you do in a sim account. You learn how to execute your trades. You practice it till you get really good at it. Okay? David S., I see your question about automation. I'll get to that next. So I put the horizontal line here to mark where our new stop and reverse is. And I also want you to see in relationship to the long trade, where it got long here at 23, it's a big setup. Remember, 377 tick charts can give you different size setups. So this one's a lot larger. One of the things about range and momentum bars is all the setups are basically the same size because the bars are the same. They're not always the same. It's a 3-bar setup. Actually, that would be more true with Catapult Trader, which is a single bar setup. It's totally different. But with Spotlight and Counterpunch, it's a multiple bar setup. But you get a bigger variety of sizes of trades with tick charts, because you can get a lot happen or a little happen within a bar, just like a time-based chart, kind of. Anyway, it's a big setup because target 2, which is your objective, is up at 58. That's 35 ticks. That's a $350 move. And the stop is at 29, down here. So check out where the entry is to go short in relationship to the full risk on the trade. It's slightly less than 50%, right? It's right in the middle, a little bit, maybe a tick or two below. So when it triggers in short here, you're getting out of the purple trade with a much smaller loss than where the full stop is. So even though you stop and reverse to short, you're like, that sucks, I just lost on a trade. The strategy mitigates that, and this is what I mean by testing. This is what I mean by working out a trade plan over lots of trades using the UTA spreadsheet. Because now you have a trade that you lost on, but you were able to mitigate the risk and get out of the trade sooner. Now, there was a comment, I forgot who it was, that I think it was you, JDS, it says, get out of a losing trade, right? Well, we had our stop in place. We had everything mitigated. Our target 2, which was our ultimate objective, is better than a 1-to-1 risk-reward ratio. That's good on a day trade. But now it's even way better because we're able to get out of a losing trade with only a partial loss, cutting the full loss down significantly. And then we get short because that's just because the market's telling us what to do. That comes down and hits target 1. We're trying to get to target 2. So when it gets to target 1, the stop is now moving down. You're locking in some break even. You're either going to work around your adjusted entry or the unadjusted entry, but basically you've mitigated the risk on the short trade. The stop even moved down further, and then it stopped out. So in essence, you got out of the purple trade with a smaller loss. You got into a green trade with a chance of hitting a full winner of 24 ticks, but then it just stopped out because of money management. And now you're flat. Notice how much that saved you because the price did ultimately come down and hit the full stop on the purple trade. John, thank you for reminding me. Please hit the like button, hit the thumbs up button. Thank you. Sometimes I forget I'm a YouTuber now. We're not going to do the trade room on YouTube forever. It is for now. I do appreciate the thumbs up, though. But that's the stop and reverse method that I use. You want to protect the trade you're in, but you have to admit when it's time to yell uncle and get short because the market's telling you what to do. It doesn't mean it's going to work all the time. We're only trying for it to work most of the time. If it works most of the time, we're able to quit with a positive result most of the time. And like this, we grow our equity and we make money and we satisfy a reason for trading, which should be to make money. You see how it all fits together? So it all starts with knowing why you're trading. If you don't know that, the market's going to give you what you're asking for, even though you don't even know what you're asking for. Subconsciously, it's going to be based on your actions. It's not what you think or feel, it's what you do that will determine if you succeed or fail. So yeah, I appreciate the thumbs up if you can. If you feel so inclined. In here doing a trade session for you guys. Not charging a penny for it. Happy to do it because it's fun. We all learn stuff from this. Who wants to look at some catapult energy trades? Anybody? I keep forgetting there's a little bit of a delay and I got to wait for you guys to hear what I say and then respond. Okay, John says yes. All right, so and then the question, I just want to answer David's question. How does the automation work? Is there a video? Yeah, I do have videos. I have a lot of videos. There's some on this YouTube channel, and then there's some that are not on this channel. And quickly, I'll show you. Let's see. I want to find something that explains it well. So automation lets you pull up performance reports and stuff like that. So this is probably a good way to start because this is kind of how I started with the boot camp, explaining it a little bit. The boot camp was not about automation, but there is a gold advanced level membership that opens up the automation for all the catapults. And we're going to get into that, actually, I think, coming up for the next week or two, I think. But so this is a basic trade plan. I call this a control chart. And the reason why it's a control chart is because I take a start time and a stop time, which is what I told you you want to think about when you're going to start testing, and a set of goals. And in this case, the goal is hit target 3. So it's only a single contract. And then without putting any other power of quitting rules, like if you hit your goal, it empowers you to quit trading because you hit your goal. You're done. Come back tomorrow, do it again. That's a trade plan rule, for example. But this is a control chart, and it's really just meant to see how well it performs taking all the trades between a start and a stop time. Because if it does well, then that tells me that you could start a lot of different places and still quit positive and hit your goals. And so what automation shows me right away is this. I mean, that's pretty good, right? Just goes up and nothing else. There's a little bit of a stall in here. Anyone who hasn't done their homework might quit in this area here, thinking they're not getting any traction. And then they miss this. So this teaches us a lot. That's why you have to ask the right questions. And the trade, yeah, we don't chase trades for sure, but we also don't randomly take trades. Yeah, well, JDS, whether you're a Forex trader or any other trader, is what most people do. So don't feel bad. The school of hard knocks is going to teach you regardless. That's why I give you these new concepts that maybe are foreign and different, and some people fight me back on them, which is fine. I don't care. But the idea is to learn things the right way the first time so the school of hard knocks doesn't teach it to you in a harder, more expensive way. Because you're going to learn it regardless. Maybe you won't learn it. Maybe you'll just be a glutton for punishment. There are many of traders like that. They're so caught up with how they're smarter than the market, and their ego is so strong they get in their own way and they never succeed. Any engineers in the house? I say that lovingly, but I've noticed that amongst engineers more than any other profession. Now, on the other hand, a fighter pilot, a truck driver, they're the best traders. Doctors, they can go either way. Funny. Anyway, so why is this so important? Because now I can start looking at different start times and stop times. So if we look at the settings, we can see that we've got all the settings in the calculator. This is just printing what the inputs are for the calculator. But when you get lower, you have more inputs than the actual calculator. You have start time, stop time, pause times. You have where you can apply contracts on different positions, different exits, target 1, target 2, 3, 4, trailer, etc. And you also have power of quitting settings, like what's the formula for hitting your goals each day? Is it one winner and a positive result, and then you're done? Is it one winner and 3 trades maximum, or one losing trade, whichever happens first? Is it X amount of ticks? Is it X amount of losing ticks? Et cetera, et cetera. And this is how you can use the automation to figure out, well, what's going to fit best with this chart. You see? And so we can optimize, and we could run tests and get optimization reports. So the reason I'm showing you this is because I want to show you how powerful this is. First of all, we'll look at the performance report, and the performance report shows us that it's 1,800 trades. That's a lot. It's not a big winning percentage. It's only 57%. At least it's over 50-50. But what's impressive is that it's got a 1.5 profit factor. Anything over 1.5 is good. For every dollar you put at risk, you stand to make $1.50. So that's good. But the average net profit per trade is low. It's only 17 bucks. That's like 4 ticks. So when you factor in slippage and commission, you're going to have a hard time making money taking all the trades between the start time and stop time. Okay, so that's why this control chart's so important. It teaches us that. Doesn't mean we're going to trade this like that. I don't want to trade 1,800 trades if I could make more money and only trade 200 trades, right? For example, this is dating back to February, Valentine's Day. That's a long time. That's running your business. All right. So, but the thing is that you can't deny that this looks pretty good. It's just that it's deceptively not as good as it seems because of what we just looked at here. Not a good win rate, not a good average net profit per trade, which is more important because when you net out all wins and losses, you still put almost $18 in your account every single time if you didn't have trade costs. But we do. And we want to have a bigger average net profit, right? But we know we're onto something because it just, I mean, when you have an equity curve that looks like this, that's a lot of winning trades. So, how do we make this better? Well, with the automation, we can open up the automation, and the first thing we can do is we can look at a power of quitting scenario. Like, what's the best goal to quit at, and how will that change things? So let's do that right now. Let me run that test for you, and you'll see. Let me just get to here so we can watch this performance report, and I'll show you how this is just so priceless, because this is how you build a trade plan. It's not this is part of the way. There's other things. I showed you the UTA spreadsheet, of course. It's even more important than this, in my opinion. But anyway, all we have to do, this is what I like to test. How many winners do we need to have and have a positive result? Is it 1? Is it 3? So I'm the test between 1 and 5 trades because I really don't want to trade more than 5. We'll see. But I'm going to compare that to maximum amount of trades, and I'll do that between 1 and 5 also. So 1 to 5. And then I'm going to compare that to losing trades. So it's going to look at all 3 of these and give us the best configuration of the 3 parameters. How many trades do we need to get and have a positive result versus how many total trades are we allowed to take versus how many losing trades. So it might say, well, you can get 2 winners and a positive result, and you can do that with 3 total trades, but if you get 1 losing trade first, you quit. We'll see what it says. So basically, you run the test. It's 125 tests. Hit optimize, and we'll just kind of let this do its thing. Okay? And while it's doing its thing, I'll move this over to the side here. And now you can see it's crunching numbers, and it's going to go through all those scenarios. JDS, I've already been there and done that and paid the price. Yeah, okay, look, I just don't want you to feel bad about that because we all have. And what you need to do is think in terms of that's rebar and gravel that goes into your foundation, which you just haven't spent time building yet. But now you have a bunch of raw materials to add to your foundation that's going to make your foundation very strong. You just have to now decide if you're ready to do that. Because that's the first step to success. And David S., I'm doing this for you, so let me know if you're in here paying attention. You asked about automation. I'm giving you a little demo on one of the things you can do with it out of many, many things. And I just want to make sure that you're watching. And if not, that's okay. But I'm just curious. Okay, good. So we don't know how this will turn out, but let me tell you what we're interested in. We're interested in looking at profit factor. We're interested in looking at average net profit per trade. Those 2 numbers are the most important. We're also interested in looking at the winning percentage, and then we'll look at the number of trades and maybe some other stuff too. But that's the profit factor and average net profit per trade and winning percentage. Those 3 things have a unique relationship with one another, and we want to try to find the sweet spot between all 3 of those numbers. So you could see that this is going to take some time because it's optimizing 125 combinations. 2 minutes have passed. It's going to take a little, like 6.5 minutes or so. We'll just let it run. And what's really cool about this is that we can reduce that down and let that run. and we could look at a couple others. Here's a trade plan. Let's see. There's one on here that has like 3,000 trades, but all right, we'll get back to these in a moment. This is not the same. I'm not done with this workspace. Let's look at this. Okay, this is crude oil. We went over this at the boot camp. This is another control chart, I believe. Yeah, because look, this is 3,400 trades and it's winning 80% of the trades. But the profit factor is low and the average net profit is low. So it's not good enough for us. But we get a lot of confidence because of this equity curve, even though it has experienced some losing trades. But the thing, especially last week, but here's the thing. This is all trades, and we're not interested in all trades. We're interested in the right trades so that we can quit positive most of the time with minimal and efficient trading, right? You can see here some winners. So we went over this in the boot camp. This thing's in the way. Let me get rid of this for a second. So then we went ahead and looked at this with fewer trades. Same plan, fewer trades. And we were able to click through and learn, which one is it? The automation isn't on. All right, so check this out. So why is this a 1.63 profit factor and $111 average net profit? Still, the win rate's not as good, but it makes money. It loses a lot less and wins a lot more. That's the reason. But we want to fix that. We don't want to trade something with only a 51% win rate. So we can continue to work at it. All of a sudden, we have a 1.99 profit factor and an 86 win rate and a $59 average net profit per trade. And this one only had 175 trades, not 3,800 trades or 33,000 plus trades, right? That's the power of automation, you see. You only need to make $50 average net profit per contract per trade, and you can grow a $10,000 a month income for yourself after a period of time through compounding. So that's what the numbers teach us. Here's another good one. This one wins less, 66%, but it wins more because it makes $90 average net profit per trade instead of the $59. So this wins 86% of the time, but wins less per trade. The other one wins like 2/3 of its trades, not quite, 86%, but it makes a lot more per trade. Remember, all wins and losses, it nets out. Every time you place a trade, $90 more goes into your account per contract. That's how wealth is created. Even though it only wins 2/3, it's still pretty darn good. I don't know what's better. That's like, what do you like better? Vanilla, chocolate, or spumoni? But there's just different ways to use the strategy, but that's what the automation can teach us. So let's go back and see how we're doing with this. Yeah, so this one's still got 4 minutes to go. John says, this session today is golden. Thanks, TJ, for staying so long and showing us more. John, it's my pleasure to do so. That's what I love to do, and I'm glad we have the trade room for this. Let me show you another thing while this is percolating away over here. This is why I haven't put the trade plans up on the website yet. I actually have a lot of different ones, and they use different components of Catapult, and they do different things. Some of them are evening sessions, afternoon sessions. Some of them use the filter, so it's quality versus quantity. And so I just want to organize this so that I could explain each one properly. It takes time. I wish I had like 3 or 4 of me to do all the things I do that I have to do for you guys. So you have to bear with me and be patient, because none of this stuff happens automatically. And it's not easy to come up with a winning trade plan. Each one took a long time. So don't think I just did this in 5 minutes. This is hours and hours and hours, and there's a lot of garbage I have to throw away to get to this. Craig, yeah, the average losing trade 321. I'm not sure which chart we're looking at here. Okay, this one. That's true. But if you look at the settings, you have to understand how TradeStation works. But you have 3 contracts, right? So usually if a trade loses, all 3 come off. And so really the average trade would be a third of that if you're trading 1 contract, you see? Does that make sense? So you have to know the numbers, what causes them and creates them, and then use that information. There's just no perfect way where you can look at it and get all the answers, like just looking at it. Yeah, NT8 works the same as TradeStation, where it counts an exit as a trade. So 3 positions coming off at the loss is 1 losing trade, and that's going to make a bigger average loss.
Order filled.
So let's see. This is a different desktop, so I need to look at a different. I don't want to crash TradeStation by doing too much. So this is the same plan we're looking at and testing now. Let me find something else. All right, so I have a feeling this might be one of the results we're going to look at in a moment, but I've already done it. But look at how first of all, here's your 1,800 trades, winning your $17, your 1,800, your 1.5 profit factor. What happens, though, when we reduce it down? We get this, a 2.02 profit factor, a 70% win rate, a $63 average net profit per trade on only 270 trades. How many of you have heard me say, trade less, make more? Less is more. Become your own best version of the Backpacktrader. Trade less, get out and enjoy your life. I mean, that's been my mantra for years, right? But I don't just say it because it feels good. It's not just a marketing phrase. Prove it. This is proof. The numbers prove it. JDS, go all the way back to where we started today. Know your reason for trading. To make money. When you focus on that, instead of, oh my God, how do I avoid a losing trade? How do I avoid a choppy market? How do I avoid stuff that I really can't avoid ever, no matter how hard I try, no matter how many years I try? I'll never avoid it. It's not possible. So is it possible to break a brick wall down by banging your head into it? Probably not. You know who's going to win that war. So why are you banging your head against the wall, trying to do something you can't ever do? Now, I'm not saying you, by the way. That's a general statement for everyone. If you cannot control it, stop giving it energy, because you just give it life, and that life will destroy you. It lives, you die. No. The way you get rid of stuff that you can't control is you don't give it energy, and instead you put your energy towards what you can control. Focus on what you can control. That's why it's so important to trade for the right reason, so you can ask the right questions. Can I quit with a positive result a vast majority of the time while controlling my drawdown with minimal and efficient trading? Because if I do, I will grow my account and make money, which is why I'm trading. It all starts with why you're trading. Most of you don't know. You think you do, but then the stuff you do doesn't mirror what you think you know. It's like you think you're trading to make money, but then you don't do the stuff you need to do to make money. You see? So you have to decide on why you're trading and commit to that reason. Because look what we just learned, and the numbers prove it. It's not because I want it to be this way. It's because it is this way. Trade less, make more, with a proven trade plan that will grow your equity. We saw what 1,800 trades will do. 1,800 trades gave you this. But we also learned that's not making money. So how do we make money? By trading less. Trading less, I don't even know if this is the same trade plan actually. We'll look and see at the test in a moment because it finished. I could see it's finished. But the idea here is trading less. 270 trades with a higher win rate, a higher net profit per trade, and a higher profit factor. All right, let's go ahead and look now at our test that we just ran. Let me get this out of the way. So look what just happened. Do you remember that we were like under 1.2 on the profit factor? Remember? I mean, on the, the profit factor. Look at how close this is to 1.5. It's 1.48. And it reduced the trades down to 584, but it's still not that good because we still are only winning 56%. The average net profit isn't good enough. So what happened? Why didn't it improve? This is where the power of the automation will teach you so much. Let me show you. Now we're going to pull up the optimization report. Let me format it so that we can see it. Let me get this out of the way. Actually, I'm going to turn this off for a second so it doesn't crash because TradeStation's funky when I'm projecting like I am. And let me format this so that we could see the, I don't know why the default settings are so stupid. Positive values, we'll make them dark green. And let me make the font a little bigger so that we could actually see it. All right, hopefully you guys can see this now. All right, so the first thing it's going to do is it's going to choose the highest net profit. So it wants 5 trades max, or 5 losers. Basically, it says trade 5 trades and you'll make the most money from a net profit point of view. But when we look at the toggling, this is a problem with trying to project, is that you got to deal with real estate issues. Let me just set this up so that I can easily toggle back and forth. So what I mean by that is that our profit factor improved, but our win rate's still not good enough, and our average net profit per trade isn't good enough. How do we improve that? Well, there's this beautiful thing with the optimization report is that we could sort on different columns. So let's go to profit factor, which is over here, and let's sort on it and see if we can find a better profit factor. And lo and behold, we did find quite a few better ones. All of these are 1.7. 1.7 is a hell of a lot better than 1.48. Why did that happen? And why are all those the same? And why are all these results the same? Look at all these results of net profit. They're all the same, right? 57.95. The reason why is because these are all the combinations that only let us take a maximum of 2 trades, and that's it. That's why. And so the best combination that I see is number 9, 2 trades, 2 and done, basically. 2 and done. I'm not thrilled about the average. I'm not thrilled about the winning percentage. It's under 60%. But I am thrilled about the profit factor. I'm not thrilled about the average net profit per trade. It's still too low. Remember, well, actually, this is unleaded gas. It's not too low. If this is crude oil at $10 a tick, it would be too low. But unleaded gas at $4.20 a tick, well, it's too low. I mean, you can make a case for it. You could trade 2 positions and pretend it's 1, and now you're up to $50. but to me, it's too low. But we've improved it, and all we've done without changing anything is when we quit and how many trades we take. Craig says there's a lot to lean on, the TA and how to do back testing. Yeah, so before I show you the next step, I will just say this. I'm about to do a promotion on the Catapult Energy Trade Assist and the Advanced Gold Level membership, which includes the Trade Assist for all catapults you've taken. So if you have the earlier E-minis, the ES, the YM, the NQ already has this, but the energies, the grains, anything going forward, if you're a member of the membership, you get the automation to any catapult you take. Okay? So then I'm going to do a boot camp and a training on how to use this. So, and I've done plenty. All right, so with that being said, the next step along the way that I would do is start time. I would optimize my start time. What is the start time? We didn't even look at it. We can just open up the performance report, look at the settings, see our start time is at 8:45. So I will test a range of start times, stop times. I'll put on the different power of quitting. I'm not going to go 555. I'm going to apply the 222. And there's a few other things I'll do. I'll try adding a second position like a trailing stop, because we know that this is a scalp and run strategy and we need the runner. The runner makes a huge difference. We're only scalping out small targets at target 3. We need the runner. In fact, what if I just put that on now? Let's take a look and see what it does to the performance report by adding that second position. Remember I said with the $24-something average net profit, if we double up on that, we're almost up at $50. But instead of doubling up on that, what if we add an extra position and not double up on target 3, but instead put on the trailer and catch the explosive moves? Let's see if that does anything with this particular configuration. This is the beauty of automation. We get a fast answer to a big question. So, well, it did a lot. All of a sudden, we're at a 1.68 profit factor. We've gone up to 67% win rate, and our average net profit per trade jumped up to $38. And that's still with 555. That's still 5 trades. Let's put it to 222, which is what that initial optimization told us, right? 222 is better than 555. So now let's see what happens. So we can just go down and say we want 2 winners and a positive result. We'll take 2 trades total, and it really doesn't matter what we put here because there's only 2 trades total. We'll put 2 losing trades regardless. We could put 1 losing trade and see if that makes a difference, whatever happens first. 2 winners or 1 loser. Again, a big question, fast answer. So now what happens? Well, isn't that amazing? All of a sudden, the trade plan that we saw that was producing that huge equity curve but no profit has just jumped up to 1.96, a 68.8%, almost 70% win rate, and our much coveted $50 per contract per trade average of all wins and losses net profit. Every time you place a trade per contract, $50 into your account, cha-ching. And then you leverage that up with power of compounding. And I showed you on the UTA spreadsheet a moment ago what happens with that, right? I did show you that. I showed you how 1 contract makes this much, power of compounding makes that much. And these numbers change a lot when you mess with the average net profit, the average loss, the 2% that you put on, however, whatever parameters you're using. But the idea is a fixed fractional money management strategy where you're using Einstein as your friend to help you get wealthy. Power of compounding. Trading less makes you more. I will stand by that and I will prove it. I just did. This is only 324 It's not really 324 trades. It's a little deceptive. It's 324 exits. That's just how the optimization and the performance reports work on TradeStation and NinjaTrader, both the same. They count exits. So you have to know that in order to really figure out what the numbers are really telling you. So Craig's saying he'll be there. When is it? I'll announce it. We're talking about the automation boot camp. The other thing is I have my VIP membership. That's a low monthly cost, and it gives you access to all my stuff, all my strategies, past, present, and future. And I have some good ones that I'm working on. Can't wait to get those out. They're still cooking in the spaghetti pot. But for a low monthly cost, you get access to all my stuff, past, present, and future. VIP membership. And I don't know if you guys know this, but when I do the trade room, I walk on my treadmill. It's like I could be sitting. Sitting's the new smoking, right? So years ago, I got this treadmill. It's called a Lifespan 1200, I think. I have to look at the side and tell you. Lifespan. And I set it to a walking pace. I'm walking at 2.4 miles per hour. Maybe you guys can hear it in the microphone. Maybe not. I don't remember. Anyway, I've been doing it for years. And we started an hour and 45, 50 minutes ago. I've been walking this entire time. I've walked 98, 99, 10,000 steps. I just crossed 10,000 steps right now. That's what you're supposed to do each day, right? Do you realize that's 361 calories? I mean, I could eat 2 ice cream sandwiches and not gain a pound. In fact, I'd have a few calories to spare. There's a lesson in there about trading. I'm going to let you guys figure out what it is. The not so obvious lesson is stay healthy so you can live longer, because if you live longer, you'll make more money trading. That's a joke. But it is true if you think about it. So let me just see if there's any last minute questions. I thought the jiggly voice was because you hadn't had morning coffee. I've had only 3 cups today, which is kind of how I usually start. I'm on the West Coast, so trust me, 3 cups. Is that even enough? I've been doing this for so many years. I can't even sleep later if I tried. Like I tried to sleep in on Sunday. If I could sleep till 7 a.m., believe me, that is way sleeping in. It just never happens anymore. I'm so programmed. And then David says, so you absolutely can rely on those backtest stats. You can never absolutely do anything with trading. Absolutely. You have to absolutely realize that you still have to be vigilant. So that's why there's other things that I want you to do. So let me explain. This is such a great question, David. Thank you for asking it. This question hits right on the major theme of what I typically teach people. Because remember what I said. Not only do you have to trade to make money, and that's your only reason, and the only way to do that is through the results of a proven trade plan. What is a proven trade plan? This is part of the process of proving it, right? It's part of the process. But do you believe in it? Here's the thing that most people can't do. I can't do it. Maybe someone can. But maybe luck works in your favor too. But like I see 324 trades that happened. I see a pretty good win rate. I see pretty good information that makes me think this trade plan can be really good. You know what I don't see? I don't see the actual trades. I don't see what the trades were. I don't see what it felt like to experience those trades and to execute on those trades. I don't see if there was a key level that would have avoided a losing trade if I just would have made the little 2-tick adjustment beyond, or the stop and reverse adjustment, right? I don't see that stuff. I don't see other things that maybe is important that I see, like perhaps a trailing stop where when it gets past a certain target, maybe it goes to where it would have been a 3x or a 5x or whatever other multiplier for the target, where the stop presses down tighter, and maybe I exit and I can increase my average net profit over a lot of trades. I don't see any of that, do I? Not only that, but I don't see other things. Like this is using a continuous chart, and it's using sessions where the chart rolled over to the contract before it should have. So this isn't perfect. There are limitations to automation. It's just a fact. Contracts expire every month. I can't just run this on the actual contract because it expires every month. And there's gaps between the contracts. So I don't even have key level adjustments turned on, because this smooths out the numbers in the past to mitigate the gaps between contracts going forward. And even though the trade setups and the price patterns are identical, the price levels and the numbers change because it's a continuous chart. Those are all flaws, you see? So this is just a piece to the puzzle, and that's where the boot camp was. I think some of you realize this, and some of you maybe don't realize this yet, but I talked about 3 types of trade plans: the kind that you create with automation, the kind that you create manually using tools like our UTA spreadsheet, right, where you put the trades in manually. They both have pros and cons, and they both teach us different things that the other cannot teach us. So the key level adjustments, the trades that actually happened on the contract month, the ability to witness the trade and experience the trade and make decisions and think through each trade before you put in the trade into the spreadsheet, which trains your brain about the random distribution of wins and losses. You're experiencing the ugly here, trade after trade, right? Forcing your will to continue. You may have a hard time continuing after a week that just lost 223 ticks. Of course, if you did this properly, you realize the prior week won 456 ticks, and the week before that, 421 ticks. You see, what's that? 4 steps forward, 1 step back almost. So my point is that this teaches you something that automation can never teach you. So you have the automated plan, you have the manually tested plan, and then you have the hybrid of combining the best of both worlds and really getting a plan that now you can rely on. And then you continue to trade it going forward, putting the trades into the spreadsheet going forward. You practice it so that you could execute it perfectly. If you're really clever and want to really learn, you keep 2 UTA spreadsheets, one with the actual trade plan trades and one with the trades you take. You want to be 100% perfect. You won't be. You're a human being. JDS, still need the human filter, otherwise we'd use robots. Robots cannot think for themselves. And I call that the 5% art to trading. Again, a topic we covered in the boot camp. It's very important. I taught you some of it already. The key level adjustments, the stop and reverse adjustments. We figure that out with our brains. And we've reduced it to mechanical rules. So even though it's 5% art, we've made it a rule that's mechanical and disciplined and objective. We just don't try to program that in. It's too much. Too many moving parts, and when something breaks, you never know what broke. There's no point in trying to program everything in to create a robot so that you can just push a button and then, not do anything but collect a bunch of gold falling into your account. Isn't that the dream? Keep dreaming. It's a nice dream. But I'm talking about trading as a CEO of your trading business instead of being some guy trying to trade, or some dreamer who just pushes a button and expects all your account to fatten up. And I mean, if trading were that easy, you think the governments would let you do it? They wouldn't. It would quickly be illegal. There has to be risk. Risk is a tool for us, though. The thing is, and this is super important, David S., you have to think of risk as your tool to make money. not as something to be feared. It's something to be wielded, but you have to do it with great care. And that is kind of the theme of everything. That's what trading is. We have to mitigate our risk. And that's why trading to make money is where you have the odds on your side and you put very small risk as a ratio to your capital. We always say 2%, because that way you can survive the bumps and bruises and still grow your equity, because winning streaks happen. You get the good, the bad, the ugly, and the great. You have to experience that. So the UTA gives you the chance to build a win-loss column and experience it, so that when you get the acid reflux through these losses and you imagine yourself thinking, oh, this thing sucks, and if you only looked at the 1 week, you might be right. But when you look at the forest, remember, every trade is a tree in your forest. You don't want to be a little grunt running around the trees. You'll get crushed when they fall. No, you want to be above the forest. The forest is your equity curve. That's this. How are you going to experience the growth in equity with a manual test? And I'm sorry, I'm actually, I thought I was projecting and I wasn't. I should have brought this up. What I'm talking about is when you're going through this, you're going to be like, oh man, this sucks. Give me that Rolaids pill. I'm imagining losing all this money and I don't like it. It's very uncomfortable. Yeah, it is uncomfortable, even in a back test. And I want you to feel the discomfort. That's the point. That's what turns you into a trader. This is what I was talking about a moment ago and I didn't show you because it lost. But look at the week before. Anyway, the point is that every trade is a tree in your forest. In this case, 4 positions, because that's what we're testing, because we want to know the results of each exit. Like I went over this in the boot camp. Power of quitting, which exits. But remember, this is what you're trading for, growing your forest. This is what you want to be mindful of, this. Now, if you're testing, and you experience that, okay, it's getting a little bumpy in here, you really want to see this come up and hit a new equity high again, and that's going to help with your confidence. You really want to see that. Now, I said that to myself back in here. I said that in here. Okay, I want to see this make a new equity high, and then it did. Then I said it again, and then it made a new equity high again. And now it's down again, and it's trying to make a new equity high again, and it might take some time. If you're looking for guarantees, which is kind of what your question implies, so you absolutely can rely on those backtest stats. Sounds like someone looking for guarantees. It's a good question. Don't get me wrong. Just ask it for the right reasons. Trading is not about guarantees. Trading is about stacking the odds on your side so that you're better off than most of the other traders out there, and that you win more than you lose and you grow the equity in your account. You could add diversification. You can add the manual backtesting and the getting 25 mistake-free trades in a row so that you can run your business properly. You could add the other techniques that I always teach and talk about. Now you're getting closer and closer to being able to really have confidence and belief. Now take all those components away and then try to trade without that stuff. Who do you think is going to be better off? All right, guys, I've been with you for 2 hours today. Any other questions before we finish up here? Please remember to hit the like button if you like what you've heard. John will be in here tomorrow. I'll be back on Wednesday. John will be in again on Thursday. Really appreciate your time and engagement. Great questions, you guys. I appreciate it. I don't try to beat up on anyone in here. I just try to say the stuff that's going to help you. Hopefully I did. And again, I know there's a little delay, so I'll just wait and give you guys a chance to ask any final questions or closing thoughts that you have. You can reach me, Troy, at backpacktrader.com. You can click on the link inside of the notes to this session and join our Trade Hacking Club Discord channel. Other than that, I hope you enjoyed the session. Everyone have a wonderful day. I'll see you next time.